What's going on, everybody? Welcome back to my YouTube channel. In today's video, I'm going to be showing you how you can improve your overall win rate with trading by simply targeting confirmation style entries rather than the typical aggressive entry style approach. Let me show you exactly what I mean. All right, so in typical SMC strategies, we have two main styles of entering the market. Now, the first one is the aggressive approach, which looks a little something like this. It typically occurs during the continuation of a trend. So we have a break of structure in one direction and then a retracement back to the supplier demand zone that was responsible for that break of structure. And then hopefully, if our analysis is correct, we see a continuation in our favor. Now, as you know, with every strategy and every approach, there are pros and cons, right? So let's go over some of the pros with this model first. We have overall minimum chart time, relaxed trading style, and higher time frame trading. So these all kind of tie in together. So minimum chart time, the reason I put that there is that you can typically identify these opportunities well ahead of time and then set a limit order on your trading platform and then just kind of step away from the charts, right? You don't need to be waiting on the charts, staring at every tick while it forms. You can really just set it and forget it. And that ties into the relaxed trading style as well, because when you have that set and forget mindset, you can kind of go about your daily life and do what you need to do. Now, the reason I put higher time frame trading here is because typically the best aggressive opportunities are found on time frames such as the 30-minute time frame, the 1 hour time frame, the 4 hour time frame, etc. All right, now unfortunately there are some cons with the aggressive style approach. So let's go over those now. First of all, we typically have a low win rate with this approach. In my own trading, I've noticed it's averaging around 30 to 50%. Of course, these numbers are going to vary per trader, but this is the average that I've noticed. Now, overall, we also have a low risk to reward ratio for most of our trades, hovering around the 3 to 5R range. Now, because our win rate isn't too high and the risk to reward ratios are typically lower as well, that results in a low overall confidence in this approach. So it has its pros and it has its cons. But with that being said, let's take a look at the next entry approach and see how that compares. All right, I'm going to keep this short and sweet so we can dive into some actual chart work. But basically, this approach is called the confirmation approach, and it looks something like this. So this typically occurs at reversal points or during continuations, but it has to be based on a higher time frame point of interest. So in this example, we have a 1 hour point of interest, and we were able to enter on the 5-minute time frame based on reversal structure. Now, before we get too ahead of ourselves, let's look at the pros and cons of this approach. So here are some of the pros with this approach. We have typically a higher win rate, averaging around 40 to 60%. Again, these numbers will vary based on the trader themselves, but this is the average that I've noticed in my own trading. Now, typically you have a higher risk reward ratio for your trades. This is because you're able to enter on lower time frames. Even though you have that higher time frame bias, you're able to enter on the lower time frame so you can have tighter stop losses and bigger targets. So with these two going together, we then have the third point, which is increased confidence overall in our strategy. Once again, with every approach and every strategy, we also have cons. So let's take a look at those. Now, the first con here is, of course, increased chart time, because we're not simply entering based off of that 1 hour point of interest, right? As soon as price tapped into that 1 hour point of interest, we could have taken an aggressive entry, and in this case, it would have worked. However, we wanted to wait and look at the charts attentively to identify that bearish structure so we could have that added confirmation that price is going in our intended direction. So that leads into the attentive trading style. You have to be sitting at your charts waiting for this to happen. You could certainly set alerts on TradingView or your other trading platforms when the 1 hour point of interest was met. However, from that point on, you need to be attentively watching your charts, waiting for this structural formation to occur. Now, in my opinion, the third point on this cons list is probably the biggest con of all, and the reason why most traders have a very hard time with this approach, and that is lower time frame complexity. So typically when traders are on the 1 minute or the 3 minute or the 5-minute time frames, they really get lost in all the noise because, of course, when you're zoomed into price on lower time frames, there's obviously a lot more candles to look at. And with that being said, a lot of people get confused with the structure on lower time frames. For most people, it's easier to read the highs and lows in the market on higher time frames. So I hope I did a good job of identifying the pros and cons with both of these approaches. Now, what I'd like to do next is go into some real chart examples so you can see both approaches in action and you can be the judge of which suits your lifestyle and your trading style the best. All right, guys, let's dive right into it. So we're taking a look at EURUSD and we're currently on the 4-hour time frame. Now, the order block that I have identified here, which is going to be the point of interest, is based on this candle right here. And as you can see, when I zoom in, we've already tapped into that order block, okay? We tapped into it right here and pushed very strongly to the upside. However, look at this huge momentum that came right back down into that zone. Very cautious of that. It would be crazy to set an aggressive entry right here because that's basically like trying to catch a falling knife. You can see that back here, that would have successfully worked as an aggressive entry, but more often than not, it doesn't work and you get stopped out very quickly. So in this case, with all of this bearish momentum, I would certainly like to look for a confirmation style entry rather than just simply putting an aggressive entry right here and just hoping for the best, right? So with that being said, I like to pair the 4-hour time frame with the 15-minute time frame. That's the typical confirmation entry that I look for. So this is the 4-hour zone. Let me just rein it back a little bit. And within this zone, we can already see that we've had a liquidity grab, which is great, right? This is not considered a break of structure because there's no candle bodies that closed below that previous low, so we label it as liquidity. Now what we need to do is wait for a change of character to the upside, which at the current time, the recent structure would be right here. So we need that to be broken to identify a change of character to the upside and a potential buying opportunity. Let's play price forward and see if that happens. Okay, so right there, let me label the change of character. Right, so that's the change of character, and that's all we need, honestly, to tell us that the higher time frames and the lower time frames are kind of aligning with each other, which adds more probability to our trading decision. It increases our chances of success. So what we can identify now is that this order block or demand zone, whatever you'd like to call it, is responsible for that change of character to the upside. So I'll label it 15-minute, and now we can set that limit order. In terms of stop loss, we could do to this low right here, but let me just round it up to 15 pips. And in terms of a target, I don't know just yet. We can maybe target this buy to sell candle right here. That's a 7.3 risk reward ratio. I don't know if it's going to get there yet, but let's see what happens. If more structure develops, we might adjust the take profit. But let's play price forward and see how this goes. Okay, that happened pretty quickly. Let me move this over here because that's where the order would have been tagged in. And you know what, just to be conservative here, let's change the take profit to this high right here. That gives you a 1-to-5 risk reward ratio, which is more than healthy. So let's stick with that and see if that gets hit. Okay, it gets hit right there. So that's your full take profit. Of course, you could have taken partials throughout this trade, but the overall take profit was met. So as you can see, in this example, you could have certainly taken an aggressive entry from this 4-hour zone right here. However, you would have had to have a huge stop loss to cover that entire zone. It would have to be about 40 pips or so. Target is debatable. You could target somewhere up here, but then it's turning into a swing trade, right? So you have to have the patience for that as well. Now to achieve that same 5R risk reward ratio, we'd have to target all the way up here, have a 40 pip stop loss, and comparatively with our confirmation style entry, we have a 15 pip stop loss. We're targeting just over 75 pips, and that trade took much less time to hit the full take profit. So you can already start to see some of the benefits with this entry approach in comparison to the aggressive approach. Now for this example, we're going to do something a little bit different. This is actually a trade that I recently took and almost got stopped out of. So I decided to take an aggressive style entry approach on this trade, and I almost instantly regretted it. And I think this would be a good example to show you all, to go over how I could have approached this instead and been much safer about it and probably achieved a much better risk reward ratio overall. So let's get into it. This is on NZDUSD, and the initial opportunity here was identified on the 1 hour time frame. So I identified this demand zone here. It was responsible for this huge bullish momentum that broke multiple structural points to the left. Now I identified some buy side liquidity sitting above these highs. On higher time frames, I had a good understanding that it's very likely for price to trade much higher than this. So this was a very short-term area of buy-side liquidity. And price was just consolidating, moving sideways, building up a bunch of liquidity near these lows here. And that was prior to my point of interest being mitigated. So in this case, like I said, I decided to set a limit order here, just a buy limit order. So that is the aggressive style entry approach. And as you can see, I almost got stopped out. If I were to have traded this like most other people trade it and put my stop loss right at the low of the zone, then I definitely would have been stopped out. Luckily, I kind of have OCD and I like to round my stop losses up. So I typically go for a 15 pip stop loss at minimum when I'm doing aggressive style entries. And that kind of saved me in this situation. And of course, price did eventually hit the overall take profit. However, this is a very ugly trade and I don't like the look of it. And it prompts me to dig deeper and see how I could have improved it. So let's apply the confirmation approach to this past trade. So like I said, this is a 1 hour zone that I identified here, right? Now let's drop down to the 5-minute time frame. So with 4 hour points of interest, I like to pair it with the 15-minute time frame. With a 1 hour point of interest, it's really nice to pair it with a 5-minute time frame. I just find that these 4 time frames kind of intertwine very nicely. So I would definitely recommend those for this approach. Now, let me take this zone back. I'm going to hide this order for now. And let's take a real close look at what happened here. So as you can see, my 1 hour zone was actually completely invalidated. Price blew right past it, which, like I said, could have resulted easily in a stop loss being hit. Luckily, I was safe because I gave my stop loss a little bit of breathing room, but we don't want to be giving our stop losses breathing room. We want to be accurate with our trades. We shouldn't need to give price room to breathe. We should be entering with precision. So if you take a look at the 5-minute time frame here, let's identify the structural occurrences that happened. Let me use the replay mode to eliminate all of that price action, and we can see what really happened as soon as price tapped into this 1 hour point of interest. So using my arrow tool, I'm going to identify this as a liquidity grab. Actually, I could probably identify this low as the liquidity grab because we didn't really see a break of structure beyond that point. And in fact, we reversed and broke structural highs from that point. So that's going to be the liquidity grab. And then this could be labeled as the change of character. Once that change of character occurred, we could then identify this candle as our demand zone that we would like to target for an entry. You can label it 5M because we're on the 5-minute time frame now. And then from that point, we could have set a limit order. Now, I could have achieved a much tighter stop loss here. Honestly, you could go down to like 5 pips. Let's do that. That still gives us, actually, I'll go to 6 pips. Give it a little bit more room next to this wick low right here. And let me go back to the 1 hour time frame. I believe I was targeting, yes, this buy side liquidity here. So if you extend price all the way up here, your take profit. Now let's go back to the 5-minute time frame. We now have a potential just under a 1 to 11 risk to reward trading opportunity. So you can see how drastically that improves the trading opportunity. Let me bring up the object tree and I'll show you the position that I had, right? So that was 3.73R. This could have been almost 11R. So that right there is one of the main benefits of the confirmation style entry. However, the main benefit, in my opinion, is the added safety and the added confidence, right? So this could have been a losing opportunity. Like I said, luckily I was kept in, but this is how I should have approached this. Let's play price forward and see how this one played out. So we can see right about here, we were tagged into the trade. Let's just extend this out because I know it's going to take a while. Right? And then we can play price forward and see how it develops. As you can see, you would achieve massive risk reward here with very, very minimal risk. And you have that added confidence that price is already aligned with the higher time frame. So all this confirmation style entry is doing is telling you that the lower time frame that you're using for execution is now in line with your overall higher time frame bias. So I had a long bias on the 1 hour time frame, but the lower time frame, in this case the 5 minute, was not yet aligned with that higher time frame bias. So by waiting for that liquidity grab and change of character to the upside, that is telling us that the 5 minute is now aligned with the bias on the 1 hour. And that adds a lot of probability to our trading idea, and it increases the chance of success. Let's continue to play this out, and we'll see the final result. Let me just go to the 1 hour time frame so this doesn't take too long. And there you have it. Price pushed actually way past the buy side liquidity that I was initially targeting. So let me pull up this past position here. We'll put them side by side so you can really see the astronomical difference here, right? By entering aggressively on the 1 hour time frame, I entered at the high of this zone, and I had to put my stop loss comfortably below the zone past this wick, and that gave me a 15 pip stop loss. By waiting for that added confirmation, I could have avoided a potential loss, been more confident in the strategy overall as price created that change of character to the upside. And the main point here is that I could have achieved a 6 pip stop loss instead of a 15 pip stop loss, and targeting the exact same level of buy side liquidity up here, could have achieved a 10.8R trade in comparison to a 3.73R trade. So the difference is pretty mind-blowing, and I hope these two examples really clarified for you the difference between aggressive style entries and confirmation style entries, and hopefully this plays a part in how you go about your trading. So I hope you all enjoyed this video, and thank you for watching. Make sure you hit the subscribe button, and if you'd like to see the trades that I take in real time, you can join the Currency Pros Academy. The link is in the description of this video. I'd be happy to see you on the inside.